Are your clients starting to get nervous? Are you hearing from people, is now the time to sell? I've made a lot of money probably since the market bottom last March. What do I do? What are the main questions you are getting?
Frank, clients are asking about the froth in the market. We're working primarily with corporate executives, family business owners, and entrepreneurs, so people who are participating in the economy and their careers. And they see froth, they're concerned. They're wondering, on the one hand, should we be cashing out on some of our winners? On the other hand, they're also looking at the cheap price of debt and wondering if this is a good time to actually be leveraging up the portfolios. And so as we look out at the markets, we think the price we pay for investments matters a lot on the overall return. So we take a valuation-driven approach. And we certainly see areas of the stock market in particular with lots of great opportunity, particularly in the U.S. small cap and international space. And we also see areas that we're really concerned about, particularly U.S. large cap stocks. So we're allocating.
Sandy, let me jump in for a second because I want to ask you about something you just said. So clients are saying, should I borrow money to buy equities? I think that's what you said, referring to the cost of debt. Is that a?
That's right.
You know, I've been doing this 25 years. That kind of comment does make me a little nervous. Should we be borrowing money to buy equities?
We think that's a great opportunity at some times, especially when the cost of debt is so low like it is today. You know, it's really easy to borrow against the equity of your home or against the value of your stock portfolio. But as we look at the market, again, Brian, because we see areas of opportunity, but also areas of concern, we don't think that this is a great time to be leveraging up the portfolio. But we are keeping that lever available for when the time is right. Just not right now. But it's a good question to be asking. Arbitrage is always a great thing to take advantage of when conditions are correct for that.
Yeah, and are you still macro optimistic on the U.S. equity markets? I mean, it's such a monster return off the bottom, and valuations, I'm not going to say are quote high. That's not for me to say, but they certainly aren't low.
I'll say it. We think parts of the market are really high, especially U.S. large cap. And I think what Dom was saying about consumer staples is really important. In this environment, we think it's important to look under the hood and make sure that you're being very intentional about investments that you're placing in the portfolio. A broad market approach, like a 60-40 set it and forget it approach, we don't think is going to do well in the years ahead. We think you need to really be looking for the areas of the market where prices are low and return expectations are high. And again, for us, that's in the U.S. small cap area, particularly value stocks, and overseas, especially in emerging markets. And those two areas have been doing really great since the fourth quarter of last year and continue to do well into 2021, which is really great news for us in the way we're deploying portfolios.
Shepard Smith here. Thanks for watching CNBC on YouTube.